Welcome back to the floor of the CME Group here in Chicago, February 8th. I'm Killer from Treasury Curve. Treasury Curve is an institutional money market portal. We assist firms in overnight cash management. I apologize about not having a report Friday and Monday. I had a previous speaking engagement commitment down in the Dallas area, if you get my drift. It was a great weekend. Hope you guys enjoyed the Super Bowl. What a tremendous game. Let's talk about the issues at hand today. And I want to get back to my Notre Dame football days here of Coach Holtz. He taught us one acronym that was applicable on the field as well as off the field, and that acronym is WIN, W-I-N. And it's just amazing how great it is because it stands for what's important now. And I've talked about this before. We have so many issues at hand, and what is important now? You know, get me at my Twitter at the Killer here or comment on this video. But we have sovereign debt. We have the Egyptian Middle East situation. We have municipality situation here. We have the China rate hike overnight. We have earnings, which were great. So there's so many different moving parts here. But what is important now? And I think, to be honest with you folks, it's all about the QE2. And what is Uncle Ben going to do? You know, we had Fed talk today. All three Fed guys were talking. And some people are saying the QE2 needs to be discontinued. Some people are saying maybe QE3 needs to be visited. So Uncle Ben is at the driving wheel. And he's essentially sitting there holding this equity market bid. Because last Thursday he spoke to it. He said, well, if things go bad a bit, we'll do more QE. If things continue to go well, we'll back off. So he's essentially put a floor into this market. Every time you see that S&P come off 2 or 3 handles, they bid it back up. So until Uncle Ben actually makes a distinct decision of this QE2 finalization or the QE3, we'll see where it goes. Let's drill down a little bit in the treasuries, folks. We got a big supply this week, $72 billion in Fed issuance this week. Today, 3-year auction, $32 billion. You know, I think the 10-year and the 30-year, we're seeing the highest yield since 2008. You know, when these rates move that fast, there's two ways to look at this, folks. You know, is this good that rates are normalizing and the economy is able to sustain this? Or is it moved too fast and possibly going to hinder the real estate market recovery, which is kind of the backbone of this recovery due to the fact there are no new jobs being created. That was quite evident last Friday. You know, let's talk about the S&P. Big shocker here, folks. New high. You know, 1320 was a high yesterday. They came back and tested it again today. We're kind of seeing a flat, muted trade. You know, big testimony tomorrow from Uncle Ben. We'll see what he has to say. You know, the Dow, another new contract high up at 12,153. They keep on coming for this. You see this consistent bid in the market. I do not know what will derail this, but there should be some type of little bit retracement here. The bulls are looking for it. The bears are looking for it. It's just not happening, folks. Don't know when it's going to. Euro currency. You know, I tweeted yesterday that 100-day moving average was coming in at 135.05. It went right to it, traded 135.02, and we're almost 2 cents higher since then. You know that today the 100-day moving average is coming in at 135.11. The weekly pivot, which we are really touching right now as I speak, is 136.58. You know, a lot of ECB talk yesterday about a rate hike to kind of curb the inflation, and that's all the market really needed to hear about the euro currency, and they bought everything they could in anticipation of another rate hike, just like China did overnight. So folks from the CME Group here, be careful. Look forward to tomorrow's testimony. I'm the Killer, and remember one thing, be the hammer, not the nail.